Welcome back to another episode of Paladin Financial Talk. I am your host, Nikki Foley, and I am with my co-host, Mr. Jeff Quick today. This is our first show that we've ever done together.
It is.
I'm looking forward to it.
Yeah, it should be fun. Absolutely.
So last week I introduced our topic for the month, and it's on benefits. And so last week I talked a lot about Medicare because it is getting into annual enrollment. And when we started talking about that, might as well address it across some of the other areas and making sure that as we talk about benefits, we talk about employee benefits. And then Matt's going to round out the end of the month with federal benefits and what might apply to that category of employees. And so today, Jeff and I are going to talk about employee benefits, but we're also going to talk about the gaps that might exist and how you might address that and fill some of those. So most people rely heavily on the benefits that they get through work, and that's going to include the things like health insurance, life insurance, retirement planning usually looks like a 401k or an equivalent type plan, but those benefits oftentimes leave gaps and they're not fully comprehensive. And so the goal today is just to help identify what's missing and how do you strengthen your overall plan. And I have to say this, and it's a statistic that I'm not going to get quite right, but when somebody goes through the open enrollment period, this time of season or this time of year is usually when it happens, they spend on average, I think I've heard two different statistics. One was 13 minutes. The other one was 17 minutes. And so you think about all the money that's going into benefits and all the things that you can get out of it, but you oftentimes almost like do it the first time and then set it and forget it, and you just put yourself on autopilot after that. And so it's really important to take time at this time of year when you are going into open enrollment and try to do the best you can to understand the benefits you have, making sure that you maximize the benefits that you have. And if there are some gaps, maybe partnering with a professional to make sure you know what's available and how you might fill some of those gaps. So with that, should we kick it off and get started here?
Absolutely.
All right. So again, I already mentioned this, but let's walk through the most common employer benefits one by one. So health insurance, disability insurance, life insurance, typically a retirement plan. And then there's a lot of other fringe benefits that come in the forms of, and here we go with acronyms, but HSAs, FSAs, stock plans, and things that get a little bit more specific depending on what company you're working with. So let's go through each one of these and I'll share what's typically provided. And then Jeff, if you will explain where there might be some financial gaps. I feel like this is an area that you've had a key part of your business, especially the early years of your financial practice. And I think it'd be fantastic as walking through some of these and how you strategically address those gaps.
Yeah, absolutely. And I think one of the keys is combining your employee benefits with your personal plan as well. A lot of financial advisors look at statements and what the client needs. They don't take into consideration what they already have existing through their employee, even to the tune of their asset allocation. You want to make sure the allocation of your assets in your 401k plan or your qualified employee plan also match what you're trying to accomplish with your financial goals.
Absolutely. That's a good point to make. And I think each one of us bring, a little bit of unique perspective when we're working with our clients. Where my background is in HR, I offer an analysis of their benefits, their employee benefits, every time I'm working with my clients, and especially this time of year, send them over where from that perspective, I know that that's something you offer, Jeff, every time that you're working with your clients is making sure that they, look at their 401k and offer an allocation in that as well.
Absolutely.
So take advantage of the resources and tools that are around you. And when you're working with your professional, make sure that you're integrating those. So there's some things that, like I talked about on the health insurance side. So let's start with that category, if that sounds good. And so your health insurance is typically going to cover your hospitalization, your preventative care, prescriptions, and oftentimes you're going to have another plan offering such as dental insurance or vision insurance that you can add on. So deductibles and out-of-pocket maximums are typically what we're finding is they're higher than they ever have been. The cost of your medical, your health insurance is going up, and it creates a lot of chatter within the workplace. It creates a lot of chatter, on the Medicare side of things. And so making sure that you have a good understanding of, even in the world that we're living in, that they are going up, that you know what your gaps are and how to maximize what you are getting. And so gaps in mental health, gaps in alternative therapies, extended home care. There's all kinds of different things that get into the really nitty gritty. But if you can spend a little extra time or work with a professional, I certainly think that will help you. But let's pull it out a little bit here and talk about health savings accounts and some of these other pieces that people often overlook.
Yeah.
So let's start with just this concept of a health savings account.
Yeah, health savings accounts are probably the greatest financial tool I believe people have available to them, right? We talk about triple compounding interest, right? You get the tax deduction on the front end, tax-free growth, and tax-free withdrawals when you need them. I tell all of my clients there's no possible way you can put enough money into your HSA to cover all your future healthcare expenses. So if you're able to max out that HSA account, it will come in handy. As you know, Nikki, you can use that to pay your Medicare premiums as well. So there's a lot of ways to utilize that. You can even go backwards and pay for past healthcare expenses. You should have documentation, but you can use your HSA for past healthcare as well. So big part of your overall financial plan and something people should take a close look at. There's also supplemental policies people can look at, accidental death insurance, critical illness to cover some of those unexpected costs and offset those as well.
Yeah, I'll stop you there for just a second, Jeff, if you don't mind. I think about planning. And when Jeff and I were preparing for a family, you can add on some of these policies for the year that you say are expecting to be in the hospital, have a kid, and so forth. And so it's not a set it and forget it situation or, oh, I'm adding something for a long term, like a hospital indemnity plan. That is a temporary situation where you do it in the planning process of, say, having a family. And so being you're not always going to be able to plan everything, but when you can, adding some of those things on really can help cover the bills when you have a medical situation.
Absolutely. Every year that renewal comes up, you want to think about what medical expenses you have, and additions to a family are a great one. I'm now at the point in my life where I have some things I could have done, such as ACL repair. I've got a bum shoulder. So it also may make sense to lump those all into a single year. Once you maximize those out-of-pocket expenses, start to take advantage of those. So that's something to look at as well.
Absolutely. And that goes back to the concept when we were talking about a health savings plan that attaches to a high deductible medical plan. And it may be appropriate that if you're a fairly healthy person, you use that normally, unless you're going to have a year where you know that you have some things that you got to get done, then you move over to a traditional plan. And so it's really not a set it and forget it mentality. And you have to be aware of what's going on and plan full to the best of your abilities so that you can take advantage of some of the things around you and some of the additional policies and programs that are available to us. Anything else on the long-term care planning? It's on the cusp of health.
Yeah, it is. And it's something that's not covered through your employer plan. So it is something to consider. And there's alternatives to long-term care. There's obviously the traditional long-term care policies most of us are familiar with, extremely expensive. Nowadays, the majority of clients concerned about long-term care are looking at either a hybrid life insurance policy or potentially a hybrid annuity that can be used as well for those long-term care coverage to cover some of those expenses.
Yeah, absolutely. And that one, I think plays into individuals as they're nearing the end of their employment. They start thinking 20 years out. And honestly, that's when your long-term care conversations, and many people are going through it with parents and so forth. So don't shy away from that conversation. At least educate yourself in that area. Well, let's move on to disability insurance and make a few points on that one. So typically there is either short-term or long-term disability offered through an employer. What I found is you may see long-term disability come up more than short-term disability. And so just kind of a short-term is going to cover typically the first 3 months, or you have to wait to get past the 90 days to apply a long-term policy. So just kind of understanding generally how they work. It usually replaces a portion of your salary. So most of the time it's around that 60% of your base income. And it often excludes, and this is a key one, and I know that I could give you several conversations about that one. It typically excludes bonuses, commissions, things like that. And so if you think about your role as a potentially a salesperson, you got to think what's tied to your base versus what is coming through commissions and some of those additional incentives. That's an important piece as it relates to the disability insurance. And that typically ends when you would lose your job. And so just kind of keeping those in mind and how that might work.
Yes. Long-term disability will ruin a financial plan quicker than anything. I mean, if you think about it, even with the long-term care provided through your employer, covering 60% of your wages, let's use simple math. If I make $100,000 per year and I'm getting 60% of that coverage covered at 100 grand, let's say you actually take home maybe 80, right? Out of that, maybe a little bit more than that. So now you've dropped from 100,000 and 80,000 in take home to $60,000 of income, and you still haven't paid taxes on that. So now you're looking at, 45, 50,000. Your take home pay has just been cut in half due to a long-term care disability. So it's super important. It can ruin your financial future. So there's a couple of things to consider when looking at long-term care. One is there's something called own OC or own occupation. You want to pick that, especially if you're in an industry or a field where your skills will no longer be able to be used to earn the kind of money you're able to earn today. Let's say you're a doctor, you're a surgeon, a dentist, even an attorney. I had an attorney at my previous employer that fortunately took out a long-term disability policy. He was a high-earning attorney, making in excess of $500,000 per year. He got hit in the head playing in a church softball league, thought he was fine, went in, resumed his normal duties, and he literally would forget to dot I's and cross T's, which is obviously unacceptable as an attorney.
Yeah.
He had 2 kids in private school, house, country club membership, all the good stuff that would have gone away if he wouldn't have been covered by long-term care, which replaced his income. So that was just a situation I dealt with personally, and he couldn't have been happier he had paid that long-term care policy.
That long-term disability policy.
Or disability, yes.
Yeah.
The other thing to look at is pay those premiums personally. That way, when you receive the long-term care disability payment, it comes to you tax-free.
It's a good point.
So you can literally replace your income to some degree. Now, you can never replace 100% of your income, right? Otherwise, nobody would want to go back to work. So there is a cap on it, but it can definitely save your financial future. And then just something simple, make sure you're maintaining, 6, 12 months savings to cover that short-term disability case and have a little extra money in the bank until this does kick in.
Yeah.
But vital part, you definitely want to look at it, especially if you're in a very specific occupation.
Yeah, absolutely. And I think anytime that you're talking to families, it's oftentimes not just the income coming in, but if you take yourself out of the mix and can't participate in family life, I mean, it takes 2 cars to get everywhere that we need to be with kids. You end up potentially hiring additional people to help you. And it's a big mark on your family's income. And so being very planful and potentially looking at that disability. Oftentimes people overlook that because they say, oh, my employer has it or whatever. Well, sometimes let's make sure we know how it works.
Yeah, 100%.
Life insurance, that's a really a pretty typical one that you would find with an employer. Oftentimes it looks like 1-time salary, maybe 2 salary in a group life insurance policy. Usually comes complimentary to the employee. So always sign up if it's being offered. Don't overlook that one. Put your beneficiaries on it as well.
Yes.
But it terminates when you end your position with that company, and so or you retire. It doesn't oftentimes account for future income needs, debt, college, and so forth. And so you want to make sure this is one that people often just depend on what they get from their employer, and they don't look past this. Yes. So Jeff, I bet you have a lot to say on this one. Just take us through your thoughts.
Yeah, tons on that one. And for me personally, when I'm putting together a financial plan for a client, I make note of their employee benefits, their employee life insurance, but I don't count it. I assume it doesn't exist just because of that. If you're no longer employed, you no longer have life insurance.
Right.
So you want to look at that, make sure it covers enough. There's a couple different ways to look at it. If you look at it simply from an income replacement perspective, You think about somebody, again, simple numbers, $100,000 per year, a 40-year-old or let's say a 50-year-old individual like myself, you have 20 years of working left, that's $2 million just to replace your income. Now, hopefully you could still, have something to provide for them through your employee, but you want to make sure you have enough life insurance, or you just look at it as, okay, what debts do I want to pay off if I were to pass? I want to pay off my mortgage, maybe children's college education. Your wife or husband in this case may have to go back to work if they were a stay-at-home person. Now, you also need to cover potentially daycare if you have young children. So a lot of things come into play. So you look at it as either the income replacement or certain needs that you want to fill and have paid off through the life insurance. So that's a big one. There's obviously term and permanent life insurance. People say buy term, invest the difference. That works fine if you're disciplined enough to save on the side as well and don't need it in the future. Permanent life insurance policy has a lot of other benefits you can add in, such as we discussed, potentially long-term care provisions, tax-free loans. So a lot of different ways you can look at it. I always compare the two. Yes, the permanent life insurance is more expensive, but at some point, the cash value and what you paid into the policy, there's a break even, much like Social Security. Now the permanent life insurance actually becomes cheaper than the term when you consider that cash value that's in there. So make sure you look at that as well. Review it, change jobs, again, review your coverage if you're counting on that as a portion. So huge part. So again, coordinate your employee benefits along with your personal protection.
Yeah, one of my favorite planning pieces is the life insurance conversation, because I think it's so important and often overlooked. You made a good point, Jeff, that it ends if your employment ends. Well, to put even a new term policy in place, if you have a little bit with your health, that does not get done in a 48-hour period. Oftentimes doesn't get done in a 2-week period. And so being mindful that could take a good 4 to 8 weeks potentially if you have to go through all the medical underwriting, even on a term policy, it doesn't happen, and you're leaving your family with a gap potentially during that time.
Yeah, make sure you have coverage. I'd also encourage, majority of our clients are adults with children. Also for our clients, make sure you talk to your children about life insurance. Chance of anything happening to a 25, 30-year-old are somewhere between slim and none as far as that goes. However, if something does happen down the road, maybe they're diagnosed with some type of terminal illness at some point, they will no longer be able to get coverage. So even getting a small policy in place when you're younger that you'll have in case something happens that you could potentially add to or do something different with.
Absolutely. I'm going to make 2 more points real quick on life insurance. Oftentimes when you leave an employer, there's a possibility that life insurance policy is portable and can go with you. And so look into that if you think that you might, lose a job unexpectedly and will have nothing. So is it portable? Can it go with you? And then the other piece, that there are some products that, the industry continues to evolve that now have chronic, critical, terminal illness components built right into that. And so that almost bridges this gap between life insurance and a disability need. And they are priced almost very similarly to any other term product that's out there. And so it's good to actually take a little time and understand what this product looks like. And if, not to be a naysayer without doing a little bit of research on it, I think is an important piece.
Yeah. One other thing while we're on that topic is be sure you look at your employer life insurance coverage as well, because I have seen many that only cover accidental death. I've had many people come into my office, and let's say somebody that works in an office like us, the chance of having an accidental death, there's somewhere between slim and none, unless a file cabinet happens to fall over on you. That's an accidental death, right? But the majority of deaths are not accidents. And so you may not have the coverage you think you have.
That's a good point. Really good point. Let's move on to retirement plans. And that can take the form of typically a 401k, 403b, a 457. So typically there is a match that goes along with it. Not all organizations offer that, but it's fairly standard. And that is where you get free money. So many employees stop at the match. And that would be something I would say you want to have a conversation with your financial professional. There's some philosophy behind that. But Oftentimes, the contributions could be made pre-tax, and then withdrawals at retirement come out fully taxed. There's also the concept of a Roth version. And so understanding what's right for you, that's oftentimes based off of age, could be based off of income. So there's a lot of variables that go into what's right now. But most plans, the other kind of key piece to talk about is often the funds that are available within your 401k or retirement plan are limited compared to the scope of what is available out there in the universe. And so just lots of different moving parts that go along with this. Jeff, take us through this and kind of give us some thoughts to think about.
Yeah. Number one, if there is an employee match, standard answer, at least get that employee match, right? That is free money. Take as much as you can get. After that, you do want to look at different things, as you mentioned, Roth versus traditional. And that, again, is really a tax decision. Are you going to be in a higher tax bracket in retirement than you are today?
Yeah.
For most people, probably not. So it typically makes sense to have majority of your money going into a traditional 401k plan where you're getting that tax deduction on the front end. But there's also the potential that, you may earn too much money to contribute to a Roth IRA at some point. So you may want to start that now. Let's say you start off, you graduate college, you're an engineer making a decent living, but at some point you're going to exceed those Roth contribution limits. It may make sense to really take advantage of either the Roth IRA or utilize that Roth 401k through your employer. So that's a big one. And I know at Paladin, we can help you determine, where you should be putting that money and what percentage goes where. It always makes sense to have a little bit of both. So that's something to look at. Coordinate that, your personal retirement savings with your employee plan. HSAs, as we discussed, take advantage of those. FSAs, and again, look at the holdings. Are there the correct investment options for you through your employee plan? Most large employers these days have quite a few options, but they may not. Also look at the costs of the funds within that plan. They're typically low cost if they're in a 401k plan, but it's not always the case. So you may be better off, instead of going above the employee match into your 401k, utilizing an IRA personally or a Roth IRA, personal savings, or through a permanent life insurance policy. There's a lot of different ways to go, but just try and have a little bit in all those different tax buckets if you can.
Yeah, absolutely. Other common benefits. Let's just kind of wrap up here. So we talked about the health savings account. I don't know that there's much more to cover on that other than just that emphasis of it is one of the best accounts that you can have. And there's a lot of planning tools that you can go around. Anything else you want to say on that one?
Yeah, that's the main thing. I mean, take advantage of it. It is the greatest tool that you're going to have access to. So take advantage of that. Look at other things we mentioned, FSA, which is slightly different, but will also cover some of those expenses. But they need to be used every year. So you want to make sure you're not putting too much in there and you're utilizing that. There could be stock purchase plans available through your employer, other employee assistance plans, maybe education, other things you can take advantage of to advance your education and your career as well. So again, just be sure your financial advisor is looking at your employee benefits along with your personal holdings to make sure you're maximizing those and taking full advantage.
Yeah, absolutely. Benefits have gotten unique in the last several years, and there's things like pet insurance, and there's, all kinds of things that are being offered. There may be something that's, dedicated to the estate planning side of things where you have a consultation that you can do with an attorney, or you can actually get a will or a trust done through your employer. So take the time to make sure you understand it. And oftentimes there's a lot of incentives that even go along with preventative health and getting membership discounts to Lifetime or whatever your favorite workout facility. But it does take a little paying attention to and taking the steps to get things set up. But if you can, every $20 to $100 or whatever it might be, can certainly make a difference.
Yeah. Also, if you're charitably inclined, a lot of employers will match contributions to a qualified charitable organization. So look at that as well. I know at some larger companies I worked at, they're big sponsors of Habitat for Humanity, United Way, different things that they will match your contribution to, which is just a great way to get some extra money going to those charities you care so much about.
Yeah, absolutely. Well, I think to wrap things up, just summarizing how all these benefits work independently, but without coordination, they can absolutely leave holes in your personal situation. And so thinking through, I know that we typically go through kind of the 4 buckets when we talk about financial planning, and a lot of these hit on those. So, the taxes, the health side of things, the estate planning. So just making sure whatever is in front of you, that you maximize that and look for those gaps so that you have an opportunity to fill those. Anything else that you want to wrap up with?
No, I think that's good. The biggest thing is coordination of those benefits. Make sure your financial advisor knows what your benefits are through your employer, and they're helping you determine which ones to take advantage of, which accounts you should be contributing to. And all of this will lead to a happy and successful retirement.
Absolutely. Well, take time to do. This time of year is a lot of times open enrollment for organizations. Typically new plans start on the calendar year, so January 1. So take time to do a benefits audit. We have actually put, Jeff, you put together like a benefits gap checklist for us. So that is something that, that listeners can call us for or reach out to us on.
Yeah. Absolutely. Give us a call or email us at info@paladinfinancial.com, and we'll get you a copy of that employee benefits gap checklist just to make sure you're not missing out on any opportunities.
Yeah, and ask your financial professional. Call us if you would like to do one in partnership with a professional. We certainly have experience in this. This is what we like to do, and we want to make sure that all of it's working in conjunction. So we invite you to schedule your complimentary benefit review with us as well. Come in for a complimentary consultation. You can access us at paladinfinancial.com. Call us at 651-842-8406. Certainly reach out on the employee benefits gap checklist if that's something that you would like. Follow us on all the social media, YouTube, and so forth. So thanks for joining us today. Quick, it was nice to be with you. It's our first one we've done together, so it's a highlight of my day here.
Awesome. I enjoyed it, Nikki.
All right. Thanks so much.